Welcome to the Fear and Greed Business News Afternoon Report for Tuesday, the 20th of August, 2024. I'm Sean Aylmer. Every afternoon, we've got the 5 stories that happened today that you need to know about. Story number 1, the S&P ASX 200 finished up 0.2% today to 7,998 points, having earlier in the day pushed through that 8,000-point barrier. Broadly, the tech stocks did well and the real estate companies did poorly, though most of the big moves were earnings-related. WiseTech Global, BHP and Fortescue Metals were among the best performers of the large caps, while Goodman Group and Aristocrat Leisure were laggards. The big banks were mixed, so too the big retailers. Worth a mention, tech company Appen. It told the stock exchange today that it has no explanation for its shares jumping 50% in the past few sessions. Appen closed 8% higher today, meaning it's up 50% over the last 5 sessions and 160% since late last month. Story number 2, the share of Australians enrolled to vote has reached a near record, with pre-election enrolment now at its highest level of all time. Official figures released by the Australian Electoral Commission show 97.9% of all eligible Australians are enrolled to vote, or at least they were at the end of June. That figure is higher than the proportion leading into the previous federal election in 2022. That was 96.2%. An estimated 92.9% of Indigenous Australians are enrolled to vote, significantly higher than the 79.3% leading into the last federal election. Story number 3, property investor, developer and fund manager Dexus posted a $1.58 billion loss for the last financial year, deepening the previous year's loss after recording huge devaluations across its portfolio. In 2023, the loss was $753 million, and the significant worsening reflects higher interest rates triggering a reduction in the future value of properties. The result sent Dexus's share price down 9% today. If you exclude the change in valuations, Dexus's funds from operations was $516 million. That's a plus, in line with guidance. The group warned that next year's earnings would also be disappointing. Like many other property groups, Dexus has been transforming, trying to diversify its asset base, pushing into student housing, healthcare and infrastructure. It's also boosted its funds management business, with co-investment with partners a key strategy. For example, Dexus is co-investing with Atlassian for the technology group's new headquarters in Sydney. Story number 4, medical glove and protective surgical suits maker Ansell, COVID-19 favourite among investors, has cut almost 10% of its global workforce as many of its factories step up the use of automation. Chief Executive Neil Salmon said there had been some cuts from each one of its 14 factories, and there was more cost cutting to come beyond the 1,330 people who have already been made redundant. The reductions are 90% complete, Mr. Salmon told the Australian Financial Review. Shares in Ansell climbed at 9% today, though it's more than 25% below its peak of the pandemic. Mr. Salmon also outlined that a glut of medical gloves and other PPE that occurred in the COVID-19 pandemic had all but been whittled away, except in small pockets of the market. Mr. Salmon said the job shedding in part was a result of the company playing catch-up and bringing more automation and robotics into its factory. And story number 5, an interesting one. Coal miner Yancoal is cashed up and ready to buy assets such as Anglo American's Queensland coal mines. Now, the group made a half-year profit of $420 million and announced that today. But rather than pay out a dividend, as per usual, the board decided to hold onto the money, lifting the group's cash balance to $1.55 billion with no debt. The board made it clear it is looking for high-quality acquisition opportunities, and alongside the lack of dividend is the main reason Yancoal's share price tumbled 15% today. Yancoal's constitution says that 50% of net profit must be returned to shareholders as dividends every year, but the directors have the right to rescind a dividend if they feel the company's financial position no longer justifies it. Yancoal Chief Executive David Moult has previously said he wants to buy assets, particularly high-quality coke and coal mines for steel making in Queensland. That's it for the afternoon report for Tuesday, the 20th of August, 2024. Don't forget to hit follow on the podcast and find Fear and Greed on LinkedIn, Instagram, X, TikTok and Facebook. Join Michael Thompson and I tomorrow morning for the Fast 5 by Fear and Greed, the top 5 business stories you need to know in just 5 minutes. I'm Sean Aylmer. Enjoy your evening.